In this video, I'm going to be talking about one of the best purchases you could probably make, and that is buying your first home. Now, this is a very exciting time, but it can also be a scary time if you don't know what you're doing. There's a lot of documents, a lot of forms, and a lot of numbers going to be thrown at you, and you want to be ready for that. And so I want to make this video so it can help organize those thoughts and put them in perspective so you can have a better mindset and more optimization when you're actually going to get your home, because it's supposed to be a fun time, and so I want to help that out by sharing you this video. And for those of you new to the channel, my name is Basilio, and I am a realtor here in the Las Vegas area. Just wanting to give you some of the best information when it comes to real estate. Now, the first thing that you want to do, and this is kind of everything beforehand, this is like what you want to do before you even start talking to an agent or a lender, and that is to really get your credit score in check. The reason why I say this is because when it comes to the United States, probably bigger than having money itself, that is to have a good credit score, a strong one. One where you're paying off everything on time and that you have no late payments, because those are big. So if you're somebody where you have late payments, I definitely would encourage you to get those really in check, to get those under control, so that when you do get a home, you can qualify for as much as possible so you can get a home that you actually want. And honestly, paying off as much debt as possible, because trust me, it will help. One of the biggest ones being car payments, but I'll go more into that in just a little bit. And if this is something that's a really big struggle for you, I actually already did make a video on talking about how to raise that credit score, and I'll link that video up here so you can check that out, because trust me, it'll help you out. Now, let's say you have a friend that's a lender, or let's say you have a friend that's a realtor. No matter which way you go, honestly, the first thing they're gonna have you do is get pre-approved. The reason why we get pre-approved is because once you do that, you can actually see realistically what you can afford. Because let's say you go on Zillow, right, and you see a home and you think it's perfect, you think it's beautiful, it's a perfect size, perfect area, and it costs $300,000 to get, and you're thinking, oh, I could probably do that, I think I make enough. And then you go ahead to go get the loan and realize that you can only qualify for $250,000. Then it kind of just leaves you heartbroken, and you don't even want to go out shopping anymore. And when you do go out shopping, you need to compare everything to that first property that you just saw. So you don't want to do that. You really do want to get pre-approved first so you can see how much you can actually qualify for. Now, once this gets started, they're probably going to ask you for a series of documents, and that is 2 years of your tax returns. That's going to be 2 years of W-2s or 1099s, 2 months of bank statements, your driver's license, and about 30 days of pay stubs. This is just to organize all the income that you've been making for the past 2 years. And it's very important that you understand that it's the past 2 years. So another thing that you do want to keep in mind before you even start to go looking for a home and get pre-approved is to make sure that you're working in industry for at least 2 years. Now, I say industry because if let's say you're a waiter and you're a waiter for about 6 months, and let's say you quit, get fired, whatever happens, and you decide to get into construction working. You do that for about 6 months, and then for the next 6 months, you decide, oh, I want to get back into the food industry, and you become a bartender or whatever. And if you're seen by the bank as bouncing around a lot, you're not going to be seen as stable, and they're not going to want to give you a loan because they don't think you're consistent enough with what you're doing to make that income. Or if you're self-employed, they want to make sure that you've been doing your business for at least 2 years, because this shows that your business is growing, that you're doing good, everything is stable. And especially for the self-employed, because self-employed people, their monthly income kind of bounces around, and that's just what it is. So they want to make sure that you are consistent for about 2 years, and so that's one to keep in mind. But I say industry again because if let's say you are in the same industry, let's say you're doing construction working, but you're just bouncing around different companies, that's more okay because at least you're doing the same sort of work. But I would talk to the lender because some banks are going to kind of judge that differently, so you want to talk to them and make sure that you are doing the right thing. So once you do that, you turn on the documents, you're most likely going to get, there's a lot of different loan types you get out there, and that's kind of the more important one, what kind of loan you're going to get. But the main ones that everyone's probably going to tell you, first one, and that's FHA. If let's say your credit score is about 580, you're probably going to get an FHA loan, and you're going to probably put 3.5% as a down payment. Now, some banks will actually allow as low as 500. It kind of depends, though. You're kind of in tricky waters there. But if you do, you're probably going to have to put 10% down because you are seen as more unstable and unlikely to pay back the loan. And keep in mind that these people just want to make sure that you are able to qualify for these loans, and they're not just setting you up for failure. And it's understandable because they are giving you a big sum of money. I mean, some of us get weirded out by giving 20 bucks to our friends. So I mean, it is understandable that they are asking quite a bit. Now, if let's say you are a veteran and you've been in the military, you actually are probably going to get a VA loan, which you probably already know about, which is honestly one of my favorite loan types because you don't actually have to put a down payment. You actually have a 0% down payment that is required of you as just like a thank you for doing the services that you do. Now, if you are in better shape, but let's say your credit score is no less than 620, then you can actually get a conventional loan and you only need to put down 3% instead of the 3.5 from an FHA because you are seen as a more reliable person. Now, this is what I kind of recommend, but this is not really necessary. It kind of more depends on your situation. If you want to put down 20% for a down payment, you actually can waive the private mortgage insurance. Now, private mortgage insurance, that is just the insurance that insures the lender in case you default. Again, that insures the lender, not you, in case you default on the loan and don't pay it back. And this is a requirement to be paid, and it's in addition to your monthly payments up to 19%. And then once you hit the 20% mark, you can then refinance, and then you can waive that and your monthly payments will go down because of the fact. But if you want to just waive that altogether because it will save you money in the long run, I would recommend putting down 20% if you can. But it also really depends on your situation because if you don't really care about higher monthly payments, but you want to keep more money in the bank for whatever reason, again, different situations call for different times and reasoning, then you don't have to do that and you can just put down 3%. It's all the same and it's all good. But if you are self-employed like me, you're probably going to get what's called a bank statement loan. Now, a bank statement loan, that is a loan where as long as you've been in the business for 2 years, they'll look through the bank statements that you have, probably all 24 months, and they were just gonna make sure that you have an average sort of income that you make per month, and then therefore they can give you a loan on that income per month. And again, there's different types of loans, and so different situations call for different types of loans, but those are kind of just more the general ones. Now, an important thing to keep in mind is that when they're giving you this number of how much you can actually qualify for when it comes to the mortgage payments, is that they're gonna take what you're actually making and then they're gonna subtract the debts from it. So as I mentioned before, car payments are like the big ones. So if let's say your car payment is like on the higher side, like let's say it's like $500 a month. If you're making $4K a month, but you have a car payment of $500, well then you're realistically only making $3,500 a month because you have to subtract that debt, which is the car payment. Now, of course, there's other types of debts, but that tends to be the bigger one of the bunch. And so that's something to keep in mind when you are getting pre-approved and understanding why you're getting pre-approved for a certain number. Now, once that's all taken care of and you actually do get pre-approved, you're gonna get a letter, which is the pre-approval letter. And with that pre-approval letter, the agent that you have will be able to give that over to the listing agent to show that this is realistically how much my client can get pre-approved for, so they can see that, okay, it's official, you're probably gonna get pre-approved for this amount, so that we can give it to you, the house, and not just somebody who is just saying, oh, I probably can get pre-approved for this much. And now you finally get onto the fun part of it all, and that is the house shopping. Actually looking around and seeing the kind of home that you want to raise your family in or be just by yourself or whatever it may be, you know, just your first home. It's a really exciting time. And it's a special one, so enjoy this process. And the great thing about this is that now that we can see realistically how much you approve for, you can then also talk about what you want in a home. Because different people require different things and want different lifestyles. Some people have pets, so they want to have a big backyard, but don't really care about the living space particularly. Some people, they want a balcony. Some people, they want a big front yard. Some people want bigger sized bedrooms. Some people, I mean, it really just depends, and sometimes it gets onto the area. There's lots. So I would actually think about what you actually want. And as you look through homes, you're gonna get a better idea of what you want. So understand that this is gonna be a process that's supposed to be enjoyable. So take what you want, take what you actually need in a home, and really decide what is the best scenario for you. Now, once you actually get a home that you like and you want to put an offer in, this is an important step. Now, when you're putting an offer in, it's not just how much money you want to give to the person for the home. There's a lot of different things that go into this as well, like an appraisal contingency. It's an important thing as far as like how much you're willing to pay for if, let's say, appraisal is lower than expected. Home inspection, which is how much time are they going to give you to get a home inspection and to see what you want to get repaired or what you want to get credit for the repairments. A loan contingency period, which is how long are they going to give you to actually get approved for that loan. It also goes on to the closing costs, like who's going to pay for what, or even like the home warranty. So I would talk to your agent as far as like how can we make this offer a little bit better for the seller, because The point of the offer is that you also want to get your offer accepted. So I wouldn't be like, oh, I really want this home, so let's offer 15K less than what they're asking for, because it's not going to happen probably unless it's that type of market. So depending on the market, it's going to depend on how aggressive you really want that offer. But again, talk to your agent and you guys can come up with a good plan and strategy to actually get you that home, because if you want the home, you want to actually show them in your offer that you want that home. Now, if your offer is accepted, which hopefully so, you can then go on to opening escrow. Now, the escrow company, that is just a third-party company that's going to be organizing all the paperwork, and they're unbiased because they're not affiliated with anybody really. They're just the one organizing the paperwork and doing the title search to make sure that the title of the property is legit and the seller does have the rights to the property and have the rights to sell you the property. And also you're going to be turning in the earnest money. Now, the earnest money is actually part of the offer. And what the earnest money is just saying that you are serious about getting the home, that you're saying that, okay, I really want this home, you put an offer in, and here's actually some money towards the home to show that I am being serious about this. It can really differ. It can be like 1% of the overall purchase price of the home. But again, that also can be negotiated. But typically they'll have an amount that they're really asking for, and you'll want to put that, especially if you want to really get your offer accepted. So you'll put that amount, and then when it does get approved, you then give them a certain period of time where you're actually going to give them over the earnest money, and again, to show that you're serious about getting the home. And also during this time, your agent is most likely going to be giving you over some disclosure forms. Now, the disclosure forms are lawfully important, and what they really are just kind of documents explaining to you different terms. So like there is a home inspection disclosure form that says like you probably should get a home inspection because things can happen in the home. And there's also disclosures talking about how the common interest communities work, and also different documents explaining different types of terms and phrases that you may not be familiar with, to make sure that you have a clear understanding of what's actually going on in this entire process. And also during this time is probably when you're going to have the window opportunity to do a home inspection. Again, home inspections, I do urge them because there can be things wrong with the property that you definitely want to keep in mind. But understand, when you actually do the home inspection, they're probably going to give you a lot of little tiny detailed things that are not that important, because there's little things that can have wear and tear in it. It is what it is. But you really want to determine what's actually important to you when it comes to this. And depending on your inspector, they might even tell you what's the more important things to worry about. So once you do that and you actually get to see what is wrong with the property, you can then decide what you actually want repairs for. You can then ask the seller to give you credit for it, so that way when it comes to the closing, they will give you credit towards those costs and you can repair it yourself, or you can ask the seller to repair it themselves, or you can ignore it depending on if, let's say, it's not that important to you, it's not that bad. Or you can actually say, you know what, I don't even want this property anymore because there's too much wrong with it. Or the things that are important to me, it's just too much stacking on top of each other. So you decide to just not go through with the home. And then after that, you're gonna get onto the underwriting process. And this is when the lender actually takes your pre-approval. They take it over to the underwriter to determine that everything is okay, everything's legit, and all paperwork is turned in to make sure that they're actually giving you a loan, that they're not setting you up for failure, and that you can actually afford this loan, and give you a closing disclosure form, which just gives you a breakdown of the entire loan in its entirety. Now, this is where probably during this time up to this also, they're probably going to be asking you for different documents that maybe you didn't turn in, or maybe it was missing, or whatever. They're really just doing this because they really want to make sure that everything is good, because things can happen. Like back when you had the 2008 crash, a lot of people had houses that they could not realistically afford. So because of laws in place to make sure that never happens again, they really want to make sure that you can actually pay off this loan. And so it's a good thing that they are asking you for all these documents and all these important documents to make sure everything is good and ready to go. The underwriter is not there to set you up for failure. They're not there to tell you, no, you cannot get this home. They're not the bad guy in the situation. They really want to help you out and make sure everything is in check. So once everything goes through them and everything is good, you turn in all documents that they may have asked for, or maybe they didn't ask for anything, depending if everything is good to go. And also this whole opening and close of escrow, this is typically about like 30 days. That time frame can change depending on how smoothly or how abruptly things go. So it can either be shortened or it can be even lengthened a bit, depending on what actually happens. So you can finally do what is called a final walkthrough of the home. Now, the final walkthrough, this is really important because things happen. Now, if let's say you live in a place that has a lot of rainstorms, let's say there's a lot of lightning and lightning strikes the home, and if let's say you already signed all the documents saying that this is now my home and you got the keys for it, lightning strikes the property, well, that's not your problem. It's good to make sure you have that final walkthrough to make sure that all the damages that you did see there, that if you didn't ask for repairments, that they're there, or if they did repair them, that they are repaired, or if let's say that everything is just intact, there's no holes, no walls that you didn't see before, that basically the property is exactly how you intend to be purchasing it, what you imagine in your head that what it was when you decide to put an offer on the home. And it's just to make sure everything is good, property is there, and not burned to the ground. And again, that sounds outrageous, but things do happen, so you do want to make sure that you are doing this. And then finally, if everything is all good to go, then you can go on to the close of escrow, which is finally signing all the documents, making sure that this is actually now your home, that you get the deed for it, you get the title for it, and you get the keys. And that is after that, that's a celebration time to finally celebrate that you finally got a home. And that's honestly a really great feeling. When I first got my condo, it was an amazing feeling. Just honestly being able to be somewhere that's like, yeah, this is mine. And it's an amazing time. And so I really hope that this video explained it well. And this is also very general as well. I did get a little specific with it, some things here and there, but for the most part, this can basically be plugged into any real home buying process unless it's an investment that gets a little bit different. But again, different scenarios different things are gonna happen. And not everything is pretty, not everything is all neat, things can get messy, but depending on your situation, your scenario, how much of a qualified buyer you are and the market is really gonna determine how fast, how slow, or what really happens in the transaction. So different details are gonna be left out in this video because of that specific reason. And you also really wanna communicate well with your realtor and your lender to make sure everything is going good and that everyone has a level understanding of what's going on the entire time. This is kind of like supposed to be a teamwork. You're not in this by yourself. They really do want to set you up for an amazing home that you can really be happy in. So really take this and enjoy the process. Now, if you have any questions or comments or any concerns about this, definitely let me know in the comment section below. I'd love to read about it and answer any of your questions. Again, my name is Basilio. I'm a realtor here, and I'd love to help out in any way I can. If you want to see more videos like this explaining about real estate stuff, definitely hit the subscribe button down below. And if you enjoyed the video, definitely give it a like down below or a dislike down below, and that way I can determine to see what videos are working, what videos are not working. Either way, I appreciate the feedback. But thank you so much again for taking the time to check out this video, and I will see you on the next one.